Good afternoon and welcome to the Sustainable Materials Management Webinar Series, a joint effort between the National Recycling Coalition and the Pennsylvania Recycling Market Center. My name is Wayne Bowen and I'm the Program Manager for the Center and will serve as your moderator today. We would like to extend a special thanks to Bob Hollis of the Mobius Network for providing the webinar management software for this series, and Lisa Ruggiero and Savannah Betowski of the National Recycling Coalition for assisting the RMC with webinar promotion and technical support. Today's webinar will provide an update on the recycled metals commodities markets. Our presenter today is Joe Pickard, who I will introduce in a moment. Following his presentation, we will conduct a question and answer session. If you have a question or comment, please use the GoToWebinar dialog box located in the control panel on your screen. You may also use the dialog box to request assistance if you are experiencing technical difficulties during the webinar. Please note that an edited version of this webinar will be made available for viewing via YouTube links on the National Recycling Coalition and PA Recycling Market Center websites. And now I'd like to introduce our presenter. Joe Pickard serves as the Chief Economist and Director of Commodities at the Institute of Scrap Recycling Industries, also known as ISRI, in Washington, D.C., where he conducts research and analysis on commodity and scrap market developments and the key economic role that recycling plays in both the U.S. and abroad. Joe regularly provides information and insights on primary and secondary ferrous, non-ferrous, paper, plastics, and electronics markets to the 1,600 ISRI member companies, as well as industry associations, policymakers, the press, and the general public. He is also a contributor to Scrap Magazine. As a current member of the Environmental Technologies Trade Advisory Committee and the Industry Trade Advisory Committee number 9, he serves as an advisor on the recycling-related trade issues to the Commerce Department and the Office of the U.S. Trade Representative. Joe previously served as economist for the International Copper Study Group in Lisbon, Portugal, and as a research analyst at Sladen and Associates. Prior work experience included stints at the Pew Charitable Trusts, the Urban Institute, and the Academy for Educational Development. He holds an MA in economics from Virginia Tech, a BA in political science from Loyola University, Maryland, and also studied at George Mason University and KU, Leuven, Belgium. And now I'm going to turn the program over to Joe.
Great, thanks very much, Wayne, and sorry for having you read that very lengthy introduction, my bio, but thanks very much for the invitation to speak today, and good afternoon, everyone. I was asked to give just an update on what's been going on with recycled metal commodities, and so I'd like to go through just very quickly an introduction to ISRI, then go through some of the drivers that have been impacting the scrap metal markets, including volatile commodity prices, uneven manufacturing in the U.S. and globally, and then the slowdown in global economic growth and in China in particular, and some of the subsequent or more recent risk factors that we've been seeing lately, including Brexit and some of the other risk factors. Then I'd like to go into the quick market updates by metal commodities, starting with ferrous, moving on to stainless and nickel, and then the other non-ferrous metals, and then move into a quick outlook as to not just for the economy, but also for commodity markets and scrap industry in particular. So we've got quite a few slides to get through in the presentation. Feel free to put in your questions, and I'm happy to answer them as I go through the presentation or at the end, or subsequent to the presentation. If you have any questions for me, feel free to contact me directly. My email address is Joe Pickard, all one word, at isri.org, and the office line here is 202-662-8542. With that, I think I'll start to go through the slides. I think there are about 50 in total. That's 50, so hopefully you're all well caffeinated. If not, now could be a good time to go ahead and get that cup of coffee or tea. But we're going to start with just an introduction to ISRI. Hopefully most of you on the line will be familiar with ISRI to begin with. We're the trade association that represents the for-profit recycling industry, not just in the United States, but in 34 countries around the world is where our membership lies. We currently have around 1,300 members, predominantly in North America, but again, in countries around the world, representing about 2,750 recycling facilities. So ISRI members process and broker the full range of scrap commodities, not just the ferrous and non-ferrous metals that we'll be talking about today, but also paper, plastics, glass, rubber, textiles, and electronics. Here in the United States, ISRI estimates that the industry processes between 130 and 135 million metric tons of scrap commodities annually. In recent years, and the valuation changes a little bit based on where markets are, but in recent years, our industry has been valued anywhere between $80 and $100 billion annually in terms of revenue, but also in terms of economic impact. ISRI provides a full range of services to our members, whether it's advocacy work from our government relations department, whether it's safety and training from our safety folks, getting market updates from the economics and commodities division, and a lot of communication and outreach efforts as well. Here on the screen, if you're following along, hopefully you can see some of the priorities that ISRI is working on. Certainly workplace safety is a huge and primary concern for the association and for our industry, trying to make our industry as safe as possible. Promoting responsible recycling and third-party certifications through R2 and RIOS as well. Promoting free and fair trade. As I'll talk about a little bit during the presentation, overseas markets have certainly become an increasingly important outlet for scrap commodities, and it's become certainly a global marketplace. And so promoting free and fair trade practices is something that's important to the association. Also making the important distinction for regulatory purposes and others, really driving home that scrap is not waste. Waste has zero value. Scrap commodities are extremely valuable, and that's why they're traded freely in the marketplace, and why people are willing to pay money for scrap, because it's an extremely valuable raw material feedstock. And here you see some of the other priorities that we are looking at, including market intelligence. Also providing education, training, and networking for our members through a number of outlets, including our annual convention, which is held in the spring, but other events and training opportunities throughout the year. And last but certainly not least, raising awareness of the importance of recycling to policymakers, to the press, to the general public, but also to youth as well, partnering with our adjacent learning partner in terms of curriculum development for recycling and promoting contests for kids, including our annual youth video and poster contest. And more information about all these priorities is available on our website, which is ISRI.org. Okay, so that's the 10 cents on ISRI. Let's go ahead and get into scrap metal market drivers. And there are three main ones that we're going to focus on. The first one is on the volatility in commodity pricing. And we'll start with this chart, which shows the Bloomberg Commodity Index since late 2011. The Bloomberg Commodity Index is a basket of about 22 different raw material commodities that changes quite frequently. Since the end of 2011, that index is down about 47% as of this morning. While we've seen some strength in commodity prices in the first half of 2016, which I'll talk about a little bit, including some improved sentiment around crude oil markets and other major commodities. Clearly, commodities have broadly been on a downward trend since 2011. And as scrap recyclers are certainly, a part of the commodities industry, and that's a commodities-based business, that has disproportionately large impacts on our scrap recycling industry. So here at ISRI, we compile what's called an ISRI index, which is a weighted average index of some key scrap commodities, including benchmark ferrous scrap prices, copper scrap prices, aluminum scrap, and also some non-metallics, just 3 grades of recovered paper and fiber as well. And the chart here, going back to 2011, sort of mirrors what we see in the Bloomberg Commodity Index, where our index of scrap commodity prices hit its post-recession low in November of 2015. Since then, or I should say until May of this year, really we saw scrap commodity prices rebounding over the course of the first 5 months of 2016. In June and July, we saw those prices start to waver a little bit, in part due to some of the ferrous scrap grades starting to show some signs of softness. But if you can see on the screen, even though we've seen a sizable recovery since bottoming out in November, even today, prices are basically where we were about this time last year. So certainly I think most industry participants have welcomed stronger prices for most of the metallics over, on average over the last couple of months. Still not significant enough really to make a sizable positive impact for a lot of people in the industry who are still struggling really to regain profit margins at a time when we continue to see consolidation within our industry. And this is just a quick look at how some of the major scrap commodity prices have diverged in recent weeks / months. These are all published scrap prices, so these aren't proprietary to ISRI. These come from publications like Scrap Price Bulletin, American Metal Market, the Paper Stock Report, and Petrochem Wire for the plastics. If you can see ferrous scrap obsolete prices, which are the first two items, number one, heavy melt and shredded ferrous scrap, have been holding relatively steady here in August, according to most published reports. A lot of reports have indicated that the prime scrap grades have come under more pressure as the supply and availability of prime has been a little bit better than for the obsolete grades, and for shredded in particular. Even though we're seeing relatively steady prices on the obsolete in recent weeks, again, as compared to this time 1 year ago, prices really haven't moved much, even though we saw that sharp contraction in the recovery over the past 12 months. Looking at the non-ferrous scrap grades, including for bare bright copper, number one and number two copper, we've seen prices and spreads have certainly narrowed over the last year, and we've seen pricing holding steady in the last week or two, in line with relatively steady copper and aluminum market, terminal market prices, not to say physical market premiums. But as compared to this time last year, both copper and aluminum scrap prices are actually down in terms of cents per pound as compared to where they were in August of 2015. Going down to the bottom of this table, I think plastic scrap prices have had the toughest time among the major scrap commodities, according to most published reports. If you look at the HDP bottles and PET bottles, they're down considerably as compared to this time last year, and have even seen some volatility in line with what we're seeing in the energy market prices. Doing the best out of the bunch, really, over the last couple of months and for the year have been recovered paper prices. These published prices for OCC, OMP, and mixed paper are all up considerably as compared to 1 year ago, and are up even as compared to this time last month. So if you're looking at year-on-year changes, the metals have basically little changed as compared to this time last year, which is a separate comparison in terms of year-to-date, where we've seen non-ferrous metal prices, and for zinc and some other metals in particular, really showing strength since the end of last year. But year-over-year comparisons are a little bit less flattering, with the exception of paper. Okay, so that's sort of one main cyclical impact on our industry, and that's the volatility and changing commodity prices that we've seen. Second big piece of the puzzle, of course, is the close relationship between the manufacturing sector in the United States and overseas, and the health of the scrap industry. And that's clearly important, as manufacturing not only generates scrap, but is also the main consumer of scrap commodities. So as the health of manufacturing goes, even with the smaller manufacturing base that we have in the United States as compared to, say, 30 or 40 years ago, the relationship between the health of manufacturing and the health of the scrap industry remains. And here on the screen, you see just how uneven industrial production has been in the United States, really going back to the end of 2014, where we saw consistent month-on-month declines in industrial production in the United States. In more recent months, in July and June, we saw upticks. The Federal Reserve reported that industrial production increased 0.7% in July of 2016, and that's the sharpest monthly increase since late 2014. But if you look back over the recent trend, in 7 of the last 11 months, industrial production has actually declined on a monthly basis in the United States, even though some of the sectors have performed well. You know, we've had solid production of motor vehicles and parts. We're starting to see some uptick in machinery orders and orders for fabricated metal products, which, you know, at the end of the day should be net positive for scrap consumption here in the United States. But it's been a tough slog on the manufacturing front, and by extension for scrap recyclers here as well. And there continues to be that real disconnect between what we see in terms of the macroeconomic indicators for the country, in terms of GDP growth, non-farm payrolls, inflation levels, interest rates, and what we're seeing within the manufacturing base and within the recycling sector in particular. So here you see on the screen the monthly change in total U.S. non-farm payrolls. We did have that big miss in the month of May, where they only added 24,000 non-farm payrolls, which was kind of an outlier, I think, because we've certainly seen sharp recovery in those rates of payroll growth in the last 2 employment situation reports. For the year to date, average monthly non-farm payrolls have grown by about 186,000 per month, which is, you know, still consistent with a healthy and improving labor market here in the U.S. So that's an average monthly gain of about 186,000 for the first 7 months of 26. All told, the Bureau of Labor Statistics figures showed that the economy gained about 1.3 million non-farm payrolls. That's 1.3 million total jobs in the first 7 months. Compare that to the manufacturing sector in the United States, which those same statistics show manufacturers cut 15,000 jobs in the first 7 months of the year. Again, the official numbers for the recycling industry for wholesale recyclers shows that a similar level of job cuts, about 15,000 jobs lost in the first half of 2016. And that continues to show just how difficult things have been for manufacturers and recyclers here in the U.S., even as those overall headline figures show growth. So those are 2 of the 3 stool legs: commodity prices, manufacturing here in the U.S. And the third one is certainly global growth. And it's hard to overestimate just how important, when we're talking about global growth, how important China is, not just for as a growth driver, but as a consumer of commodities and a consumer of scrap goods. If you look at total U.S. Scrap exports to mainland China alone, not including Hong Kong or Macau, which is really not a large consumer of scrap, between 1989 and 1999, we sent mainland China 9 million tons of scrap. Over the period 2000 to 2014, we sent them over 210 million tons of scrap. So a huge increase in Chinese demand up through 2011, which really was the game changer for our industry. But subsequent to that, the decline in Chinese growth, and on the top left, you can see the estimates of real GDP growth as put out by the International Monetary Fund. You can see how the slowdown in real GDP growth reported in China has been accompanied by a slowdown in import demand from China for scrap commodities. At the same time that China's economy is slowing, they continue to pump out excess quantities of commodities and finished goods. And that has really had a deflationary impact globally. You know, when China produces more than what they need at home, those products need to find a home somewhere, and they do, in the global marketplace. And as prices fall in China, that has deflationary impact for commodities around the world. And in the top right chart here, you can see that in terms of year-on-year changes in producer prices for the industrial sector in China, China's National Bureau of Statistics reports that there have been year-on-year declines every month since March 2012. That's due in part to the correction in the Chinese property market, but it's hard to overestimate how important that is in terms of global pricing as well. And this picture just gives you a sense of the decline in Chinese demand for one particular commodity, and this is ferrous scrap, from all countries exporting to China, as reported to the UN. In 2009, all countries exported about 13.7 million tons of ferrous scrap just to China. In 2015, last year, that number was down to 2.3 million tons. So China's slowdown has had really important ramifications across the scrap commodity space. And of course, in terms of demand for U.S. scrap globally, this is in dollar terms, not in tons. But you can see, hopefully, in 2011, we being the United States, exported about $32.6 billion worth of all scrap commodities. This is ferrous, non-ferrous, paper, plastics, you name it. 32.6 billion in 2011. Last year, that was down to 17.6 billion. So that's a lot of lost export sales revenue for our industry. And at the same time that things have been slowing down overseas, market conditions have been stagnating here at home as well, unfortunately, as we saw reflected in the industrial production numbers. Also complicating our efforts to market scrap overseas, and I'll get to the breakdown in terms of how important overseas sales are versus domestic sales in just a sec. But also complicating things last year was the appreciation of the U.S. dollar in 2015, which, all other things being equal, makes our exports much less competitive versus other origins. When the dollar appreciates against the euro, for example, European ferrous scrap exporters can sell their material into major destinations like Turkey at reduced rates and still realize the same earnings in home currency terms. And that's what we saw happening in 2015, where the dollar appreciated both against the euro, against the yen, and more recently, certainly against the British pound. Since Brexit, we've seen some moderation in the strength of the dollar. The euro recently has appreciated to around $1.13 in recent trading. The dollar is only buying about 100 Japanese yen currently. So the dollar has backed off some of those highs that it reached against the major foreign trading partners. But all other things being equal, if the Federal Reserve, as expected, is going to be raising rates prior to its counterparts in other major developed economies like in the Bank of Japan and the European Central Bank, and given the prevailing low inflation rates and interest rates that we have here, that should attract more interest in dollar-denominated assets and should continue to support the dollar going forward. A lot of should-haves and possibilities in there because these are certainly subject to change. But just to sort of recap some of the challenges that we've been seeing for the scrap industry and for metal scrap recyclers in particular, we've seen excess global production across a huge range of commodity markets that's really weighed on prices. From excess crude oil production, excess iron ore production, excess production of other commodities. That not only hurts in terms of supply-demand fundamentals, but it also sends investors to the exits, looking for other assets to invest in, like stocks and treasuries, where we've seen not only stock market indices hitting record highs, but also extremely low discount rates and interest rates on U.S. treasuries, which typically should head in opposite directions. Again, we saw a stronger dollar hurting the competitiveness of U.S. scrap exports. We saw weaker overseas scrap demand amid the falling primary prices, because all other things being equal, when you've got falling primary prices, that makes scrap a somewhat less attractive raw material input. Really cheap copper removes some of the incentive to use copper scrap as a substitute, and so on for other metals as well, amidst the slowdown in Chinese economic and manufacturing growth. Again, we saw China contributing to global deflationary pressure, the uneven U.S. manufacturing output across not just various industries, but across geographic regions as well. Again, we saw that disconnect between the mostly positive macro figures and what's happening in our industry. So you add up all the falling commodity prices, the soft manufacturing, the strong dollar, not to mention some of the logistical and regulatory issues that our members continue to struggle with, and probably shouldn't come as a large surprise that profit margins in our industry have basically disappeared, that scrap industry consolidation continues. And as you probably saw last week or the week before, Sims Metal Management announced additional divestment of its assets here in the United States, selling a number of its facilities in the central United States to SDI, a major steelmaker here. In addition to all those headwinds that we face, and it's not all bad news, I will have hopefully some relatively positive takeaways later in the presentation. There was a lot of concern most recently about the impacts that the UK's vote to leave the EU, otherwise known as the Brexit, would have on financial markets and by extension commodity markets around the world. And we did see that spike in volatility following the June 23rd Brexit vote, here as indicated by the VIX index, otherwise known as the fear index. But just as importantly, that volatility receded just as quickly as it spiked, and we've seen most markets start to stabilize since that Brexit vote. The US dollar index has lost some of the strength, and we certainly did see it spike. I think it gained about 12% or more against the British pound in just over a week. Prior to the Brexit vote, I think it was trading around $1.48. Right? Post-Brexit vote, it was down to about $1.30 or a little bit less. But we've seen that start to stabilize a little bit. We've seen commodity prices stabilize as well. The year-to-date Bloomberg Commodity Index, when this chart was prepared, was up about 10%. These markets are pretty volatile. I think it's closer to 9% today. But we've started to see some improving sentiment around crude oil prices and other commodities, which has helped the commodity space so far this year. Certainly, we've seen strength in the stock market as well. Dow Jones Industrial Average up about 6% through the beginning of August, and again hitting record highs in recent weeks as well. So I think markets have stabilized post-Brexit vote, which doesn't mean there aren't risks associated with Brexit down the road. And I know the International Monetary Fund had cut some of its growth forecast as a result of Brexit. There's certainly plenty of other risk factors out there, whether it's the U.S. election or there's a whole long list of both domestic and global risk factors still at play. But at least as far as Brexit goes, markets seem to have taken it in stride since that initial spike in volatility. Okay, so that's some of the market drivers, Brexit, commodities, manufacturing, and China. Let's go quickly to the individual market updates, and we'll start with ferrous scrap, otherwise known as iron and steel scrap. I won't read this whole slide. You guys hopefully know what ferrous scrap is. Certainly obsolete scrap is recovered from autos, from steel structures, from household appliances, railroad tracks, and other equipment. In the United States, the largest single source of obsolete ferrous scrap remains end-of-life vehicles, and that relationship of vehicle scrappage remains closely related to new car sales. According to figures from the U.S. Bureau of Economic Analysis, light vehicle sales in the U.S. rose to a record more than 17.4 million units in 2015. That's the highest annual level recorded. And eventually all those new vehicles are going to wind up in a shredder or a scrapyard at some point in their lives. In addition to the obsolete scrap, prompt scrap, which is of course generated by the manufacturing process, accounts for about half of the ferrous scrap supply here in the United States. The U.S. Geological Survey estimates that about 67 million metric tons of iron and steel scrap were purchased in 2015. That's down significantly from prior years. And while domestic ferrous scrap participants have been facing heightened competition for available feedstock in recent years, and that continues today, the expanding economic output in generally, and some, still strong numbers on automotive and the construction sectors. I think the auto sector has surprised some people with its resilience even through the first half of 2016. And those things generally bode well for ferrous scrap supply and demand, even as we have entered into the sort of summer lull within the steel industry and the ferrous scrap sector here in August. This just takes a look at what's been going on with ferrous scrap prices through July. There you can see oops, I went too far, excuse me, decline in pricing from May of 2015 through November, subsequent recovery through May of this year, and then softening of prices over the last couple of months. Even with the rising prices through the first 5 months of the year, again, I think a lot of the ferrous scrap processors continue to struggle, continue to operate well below their capacity, and continue to think about ways that they need to rationalize their capital equipment to try to run profitable businesses. This is just a review of the domestic market situation for ferrous scrap here in the United States, showing purchase scrap, which is the receipts of scrap received by dealers for domestic consumption and for export, and taking away whatever material we have imported into the United States for domestic consumption of ferrous scrap, and then for imports of scrap, excluding stainless steel and alloy steel scrap. A lot of the trade figures will include that stainless steel and alloy steel, which most scrap processors are going to really treat as separate scrap commodities. But if you look at the estimated consumption figures, those track pretty closely with steel production here in the United States. Last year we did see steel production decline. I think USGS had steel production pegged at about 81 million tons last year, down from about 88 or 89 in 2014. And we saw comparable estimated declines in the domestic consumption of ferrous scrap, on top of the decline in overseas demand for ferrous scrap again last year. Here's just a quick breakdown to give you a sense of how important the domestic market is versus export market for some of the major scrap commodities. For iron and steel, clearly the vast majority of what gets processed here in the United States gets consumed here, and that's become more pronounced as export markets have slowed in recent years. Currently, about 83% of what we process on the iron and steel side gets processed by domestic steel mills and foundries and other consumers. About 17%, goes for exports. Compare that to some of the other major scrap commodities in the U.S., where aluminum scrap, about 70% is consumed domestically. On paper and fiber, about 60% is domestic, 40% export. And for copper and copper alloy, according to our estimates, it's a little bit more skewed actually towards export. For 2015, I think the numbers show about 53% sent for export, about 47% consumed here domestically on the copper and copper alloy scrap items. Sticking with overseas demand just for a sec, here's a look at the trend in our ferrous scrap exports by major destination from 2011 until 2015. In 2011, I think you're looking at 22 to 23 million tons exported. That's about 10 million tons more than what we shipped last year. So as you can see on the slide, the slower global growth, certainly the diminished demand from China, and the falling commodity prices, including falling iron ore prices, which is a competitor for scrap in the steelmaking process, all impacted our volumes. As far as the first half of 2016 goes, we continue to see weakness in overseas markets for ferrous scrap, unfortunately. Excluding the stainless and alloy steel, first half 2016 ferrous scrap exports were down another 16% as compared to the first 6 months of 2015 to just over 5 million tons. With that roller coaster that we've seen a little bit in the pricing, the June figures were off by nearly 30% in dollar terms to about $1.2 billion. So off 29% in dollar terms, off 16% in tonnage terms. As the dollar has strengthened, particularly against the British pound, not only does it make our job exporting ferrous scrap that much more difficult, it also makes imports of ferrous scrap into the U.S. more competitive. And we have seen that import arrivals from the UK and from some of the other European origins are actually up this year. Canada is typically at the top, which you can see at the top of the screen, is typically our largest supplier of ferrous scrap. And actually year-to-date movement from Canada south into the U.S. is down so far this year, but shipments from the UK, Sweden, and the Netherlands are all up so far in 2016. Okay, that's the ferrous update. We'll go on to stainless steel and nickel, which I put in between the ferrous and the non-ferrous sectors because certainly they have properties of both. Kind of a mixed item on the stainless. And USGS figures show that in 2015, about 45% of the primary nickel consumed here in the U.S. went into stainless and alloy steel production. Some of the other major sources of demand for nickel include non-ferrous alloys and superalloys, electroplating, and other uses. Certainly nickel and high-temp stainless steel scrap comes in a variety of forms, including wrought solids, clips, and turnings that are covered under ISRI specs ranging from Aroma to Zurich. We have our ISRI specifications included in our ISRI scrap specs circular, which is a lot of S sounds, but we update that every time our committees and board of directors approve changes to our specifications, which they just did at the last board meeting this summer. Excuse me one sec. Thank you. That scrap specification circular can be found on the ISRI website. It's free of charge and lists all of our specs, not just for metals, but for all the scrap commodities. Back to nickel and stainless. So again, the USGS figures show about 102,000 tons of nickel was recovered from purchased scrap in 2015, while over 1.3 million metric tons of home and purchased stainless steel scrap were consumed in the U.S. last year. That's actually about the same, a pretty flat rate of growth for stainless scrap consumption, again, according to the USGS figures, which, you know, they do the best they can, but should be treated certainly as rough estimates, as data, as many of you know, on the scrap industry can be less than crystal clear. The U.S. steel industry last year produced just over 1.8 million tons of austenitic or nickel-bearing stainless. That's up 8% from 2014 and actually 53% greater than the amount of stainless, austenitic stainless we produced in 2009, the last year of the recession. Excuse me. According to the International Stainless Steel Forum, global production of austenitic stainless steel was at an all-time high last year, although growth rates declined. China produced a record high 17.6 million tons of austenitic stainless, accounting for more than one-half of global output. ISSF reported that total stainless, including austenitic and ferritic stainless, actually decreased 0.3% last year to 41.5 million metric tons. Excuse me. Certainly the health and profitability of stainless scrap recyclers is closely related to what's going on with nickel prices around the world. On this chart, we see how the LME official 3-month nickel price, which was trading up towards $20,000 a ton back in September of 2014. By the first quarter of this year, was down to below $8,000 a ton. We've seen some recovery on the LME this year. Nickel prices currently trading around the $10,500 mark, which is certainly an improvement from the low that we saw in February, but nowhere near the 20,000 level we saw in 2014, or the levels that were, records above $40,000, $50,000 a ton prior to the recession. As we've seen in recent weeks, the recovery in nickel prices, stainless steel scrap prices have been following relatively closely. As of the most recent reports from American Metal Market, we're seeing the 304 solid clips up above $1,100 a ton recently. Moving on to trade flows for stainless scrap, we've seen considerable downward trending volumes moving offshore from the United States. 2006, which I think was an anomaly, and some of the figures may be a little inflated, but the Commerce Department and International Trade Commission show that we exported over 1.3 million tons of stainless steel scrap in 2006, excuse me. By last year, we had exported less than 515,000 tons. So that was a drop of 62% over the period 2006 to 2015. Exports this year actually got off to a better start. They're up about 44% as compared to the corresponding period in 2015. And that has resulted from a spike in shipments to Canada, as well as firm demand for stainless steel scrap, both from India and from Taiwan. Here's a look at which markets have been registering growth and which have been contracting since that spike we saw in 2006. Top of the list in terms of declining demand has been South Korea, where the official trade statistics show that our shipments are down 96% over that time period, a change of about 785,000 metric tons. Again, that 2006 figure for Korea is probably a little overblown, but I think it's accurate to say that the drop-off in Korean demand for stainless from the U.S. has been the largest change over that period. On the flip side of that, we have seen markets that are importing more stainless from the U.S., including in South Asia, which has been a real growth region, not for stainless, but for ferrous and non-ferrous scrap demand as well. Pakistan and India have shown steady growth. On the ferrous side, on the carbon steel side, we've seen growth in India and Pakistan as well as Bangladesh. So that has been a real growth region. On the stainless, we've also seen improving demand in Hong Kong, in Taiwan, and some of the European markets as well. Moving on to non-ferrous, this will be the last market sector to review, and then I'm happy to take any questions you might have. Non-ferrous metals are among certainly the most reusable and recyclable materials. In terms of volume, based on USGS figures and ISRI estimates, non-ferrous scrap in the U.S. made up just 6% of the total quantity of material recycled in the U.S. last year. But in terms of dollar value, it accounted for more than half of total industry earnings, in part because they're such high value per unit items. And the non-ferrous in this case includes precious metal scrap as well. Based on those figures, we estimate more than 8 million metric tons of non-ferrous scrap was processed here in the U.S. last year, valued at about $32 billion. Non-ferrous scrap certainly is consumed by our secondary smelters, by our refiners and ingot makers here in the U.S. and in more than 70 countries around the world that rely on the non-ferrous as competitive and cost-efficient raw material inputs to make new products. The Bureau of International Recycling estimates that almost 40% of the world's demand for copper is met using recycled material, while more than 80% of the zinc available for recycling is eventually recycled. And zinc is actually the non-ferrous metal that has had the best price performance this year. As compared to the last trading day of 2015, year-to-date prices of LME zinc are up over 42% as of this morning. And I'll talk a little bit about what's going on in the zinc market. Tin prices, nickel prices have also seen significant improvement for the year-to-date 2016. Aluminum has been picking up lately as well. Lead and copper have been trailing the bunch. Copper, even though we're seeing increased supply deficits globally. I won't read every part of all these slides, but just to get back to a little bit about this huge spike in the zinc prices, I think part of that does actually go back to fundamentals. So just on Monday, yesterday, the International Lead Zinc Group reported that the global market for refined zinc metal was in a supply deficit. That means supply isn't catching up with demand. A deficit of 138,000 metric tons for the first half of 2016. The study group reports that a 6.7% drop in world zinc mine production and a 4.2% decline in refined zinc production were met by a more than 7% increase in Chinese demand. Reuters is reporting that Chinese huge zinc smelting industry has slashed its fees for turning ore into concentrates by 20% amid dwindling global mine output. They report that the move could signal an impending squeeze in refined zinc supplies and a further run-up in prices that have already gained, as we saw, 40% this year, because smelters typically lower those treatment costs to attract more raw material when the ore supplies are really tight. Mined zinc production is down this year significantly in Australia and India, in Ireland and Peru, and that's all contributing to the tightness in the global zinc market. The premium of zinc over sister metal lead, which many times will trade at or near parity, actually rose to about $500 or nearly $500 per ton recently in August, and that's the strongest premium since 2007. Just on this chart, you can see at the beginning of 2016, lead was actually trading at a premium to zinc, and in recent weeks that has certainly reversed, but expanded with zinc premium over lead rising quickly. That's probably in part due to the different fundamentals between the two metals. ISRI also reports that the global lead market was actually in a surplus, where surplus is in excess of demand by about 37,000 tons during June 2016. Moving quickly through the rest of the non-ferrous markets. On the aluminum side, we've certainly seen the physical market premiums for aluminum falling to multi-year lows, even as LME prices are up 10% year-to-date, and closing stocks within LME warehouses have dropped by about 660,000 metric tons just since the end of last year. Although demand here in the United States has been relatively flat, the Aluminum Association here reports that apparent consumption in domestic markets in the United States and Canada came in at an estimated 11.7 million pounds. That's up it's about 0.7% for the year to date. But it also comes at a time when Chinese primary aluminum production has been declining, for now at least. Through the first 5 months of the year, China produced about 12.4 million metric tons of aluminum. That's down from 12.8 million tons the first 5 months of 2015. But again, market participants remain concerned that as prices recover, some of that excess Chinese production capacity could come back online. That's a concern not just for aluminum, but for other commodities as well. Here's a look at the year-to-date official 3-month aluminum prices and closing stocks. And you see how the shaded area, which is the stocks of the LME warehouses, have been on a steady downward decline, again, down about 660,000 metric tons for the year-to-date. And this chart just shows how much aluminum scrap prices have risen and fallen over the course of the recession and where they are currently. If you see the shaded area to the furthermost to the right, that's the most recent recession, where just at the start, benchmark prices like for old aluminum sheet and cast peaked at about 91 cents a pound. by the bottom of that recession, prices had gone from over 90 cents a pound to just about 31 cents a pound. Today, in this 58 to 60 cent per pound range, we're basically right in the middle of those two extremes. Here's just a chart look at where aluminum scrap is consumed in the United States. Certainly, secondary smelters account for the most consumption of aluminum scrap at about 1.68 million metric tons last year, according to USGS. While total recovery of purchased scrap in the United States came in at about 3.4 million metric tons. About 54% of that came from new scrap, 46% of that came from old scrap. Moving on to the copper market. So also this week, the International Copper Study Group reported that the global refined copper market was in a deficit of about 65,000 tons just for the month of May. For the year to date, that brings the deficit to 222,000 tons. That's a much larger deficit than the 39,000 tons registered in the first 5 months of last year. The study group reports that refined copper production increased about 3.5%. Primary production was up about 3%, and secondary production from scrap was up about 5% globally, while the main contributor to growth of copper demand was China at about 7%. Again, first 5 months of 2016, world usage of copper is estimated to be up about 5%, and that's due in large part to the 22% reported increase in net imports of refined copper into China, according to the study group data. And then just one little note down there at the bottom, the U.S. Recently opened a new front on the trade front with a complaint at the WTO about Chinese export duties of antimony, cobalt, copper, graphite, lead, magnesia compounds, talc, tantalum, and tin. Those duties on exports range from 5 to 20%, although I'm not sure. I guess the argument is that they artificially raise prices globally, and that consumers of those metals are disadvantaged by the higher prices as a result of China's export duties. Copper scrap usage here in the U.S. ISRI estimates that copper scrap usage accounted for about 34% of total apparent consumption of refined copper last year. Globally, the Copper Study Group estimates a similar range, about 33 to 35% of copper recycling input rate, while the overall recycling efficiency rate for copper, that's the efficiency with which old and new scrap are collected and recycled, has regularly exceeded about 60% globally. The Bureau of International Recycling estimates that global consumption of copper scrap exceeded 10 million metric tons in 2011, although more recent data from ICSG indicate global scrap consumption of less than 9 million metric tons last year. And the table on the right there, you can see pretty steady domestic usage of copper recovered from scrap. Slight increases, again, these are estimates, while we've seen a downward trending level of copper scrap exports from the U.S., which last year came in at about 954,000 tons. A big part of that has been reduced demand from China and Hong Kong for non-ferrous scrap and copper scrap in particular. Major non-ferrous scrap exports to China and Hong Kong came in about 2.5 million tons in 2011. By 2015, that was down to 1.6 million tons. And so far this year, non-ferrous scrap shipments to China are down about 10%. For most of the non-ferrous scrap items, overseas demand, again driven by China, has been falling. Here you see the numbers for aluminum and copper scrap. I think the only non-ferrous commodity that has seen an uptick so far this year has been nickel scrap. But again, the volumes on that item are much smaller than for the major aluminum and scrap commodities. So a lot of negative news in terms of overseas demand, but I did want to leave you with some of the gains that we've seen in overseas markets for aluminum and for copper scrap. Here you see the year-to-date export gains by volume and percentage change for some of those gains. Malaysia, Hong Kong, Indonesia, and Pakistan have all seen improving demand for aluminum scrap. While on the copper scrap side, Canada, India, the Netherlands, Vietnam, and South Korea have all seen rising levels of import demand for copper scrap from the U.S. as well. Now a quick look at the outlook, and then I'm happy to take any questions that you guys might have. Looking at Fed projections for the domestic economy, the latest projections show pretty flat growth expected in terms of real GDP in the near term. The Fed is projecting just 1.9 to 2% growth this year in real GDP, a similar level going out in 2017 and 2018, and the longer run as well, where the Fed is expecting just 1.8 to 2% growth long term, somewhat below the rate that we've seen over the last couple of decades pre-recession. They're also expecting relatively steady unemployment rates around 4.6 to 4.8% this year. Longer term unemployment rates of about 4.7 to 5%. That was unchanged from their prior projection. And inflation, importantly, expected to remain contained with their personal consumption expenditure inflation forecast targeted around 1.3 to 1.7%. That's a little bit below their preferred inflation rate of around 2%, which complicates a little bit their calculus for determining when they're going to raise rates next. I think most of the talk in the last week or two since the release of the minutes from the last Fed meeting have indicated that a rate hike before the end of the year is likely, and that should be net positive for the dollar. Here's a quick look at, we just did the U.S. projections for growth, and again, that these flat growth rates would be consistent with relatively steady scrap consumption here in the United States. Were these projections to bear out, it would not indicate a real ramp up in domestic demand for scrap. Taking a look at overseas growth expectations, these are the latest projections from the International Monetary Fund. They're broken out into actually four different pairings. One is their pre-Brexit global growth forecasts, then their post-Brexit forecast, then they've got a downside aspect to their forecast, and then they've got a severe sort of downside to their forecast. At the end of the day, the ranges really aren't that huge. Pre-Brexit, they're expecting global growth around 3.2% this year. Even under the worst case scenario for this year now, they're projecting growth would only be about 2.8%, not that far from their downside projection of 2.9%, or their actual forecast of 3.1% growth. That's the expectations on growth both here in the United States and overseas. Frequently I'm asked to provide price forecasts, which we cannot do at ISRI. We're a trade association that represents both buyers and sellers, so we're limited as to what we can say in terms of expectations for prices, but we can present some of the forecasts from our friends at the banks and other research analysts. These are the price forecasts presented most recently by Macquarie Research. They, I think, are more bullish on nickel prices than they are on copper or aluminum. For calendar year 2016, they expect an average copper price of just $4,700 a ton. That's actually below where the market is currently. And a calendar year 2017 forecast of $4,788. They're actually expecting average aluminum prices to decline in calendar year 2017. On the flip side, they're much more bullish, again, on nickel, which they expect to average over $11,600 a ton next year and $13,000 a ton in 2018. Again, nickel prices are notoriously difficult to forecast, but that's what they're going with. And their zinc price forecasts are bullish as well, not too surprising given the recent performance in zinc pricing, which again is up over 40% this year. They see an average price in 2017 of over $2,300 a ton, approaching $2,600 a ton in calendar year 2018. So just to wrap this up, here's the outlook going forward. I think for commodities and for the scrap recyclers in our industry. I think few are expecting a sort of V-shaped recovery in commodity market prices. We have seen better sentiment towards some of the major commodities like crude oil, but I think most analysts still expect commodity prices broadly to stay lower for longer. One positive side is that the soft prices on the commodities, as prices come down, those eventually set a floor for scrap pricing, which is what we saw in the fourth quarter of 2015. Ferrous scrap prices had come down sufficiently, dramatically, and again, over the course of 2015, ferrous scrap prices were cut in half basically from January to December. When those prices came down sufficiently, that really put a floor under the market by way of cutting off supply. When prices sufficiently fall low enough, that really cuts off the supply of obsolete scrap into the marketplace, which can then put a floor under the pricing, which is what we saw through May of this year. But still looking forward, there is need for additional cutbacks in excess global primary commodity production and the need to draw down stocks in order to rebalance some of these commodity markets, which are so important for recyclers, because commodity prices in many ways set the incentives for people to bring recyclables into the marketplace. I know there may not be a lot of exporters of scrap on the line here, but there certainly is a need for those who are exporting scrap from the U.S. to develop new markets overseas. I think we certainly became overly reliant on China, which for most of our scrap commodities is by far the largest market for the non-ferrous scrap items. For example, China and Hong Kong typically account for about 2/3 of all of those items that we ship. And I think it's important for our exporters to develop some of those new markets in South Asia and the Middle East and other markets around the world. There's not a lot, of course, that scrap recyclers can do about commodity prices. So there has been an increasing focus on improving their safety, on improving their operational efficiency, and certainly on improving quality. And I think the quality issue is not going away. It really makes a difference, I think, between winners and losers going forward in terms of who can provide the most consistent and highest quality product, as well as a lot of our guys certainly have looked into diversifying the products that they handle. A lot of the traditional metals recyclers looking into the non-metallics, into electronics and other areas of the recycling industry to capture margin in any way they can. I think for the ferrous scrap recyclers and the metal recyclers, there's not going to be the same level of investment that we saw in large capital equipment. The mega shredders obviously are not running at full capacity today, but I think you're going to continue to see targeted investment, particularly in sortation and separation technologies, but also targeted investment in acquisitions and continued industry consolidation, as we recently saw with the SDI purchases of some of the SIMS assets here in the U.S. As always, we like to remind our audiences that these are cyclical and evolving markets, and it's a cyclical industry as well, with extremely long-term positive trends. If you look at global population growth demographics, if you look at the continued urbanization and need for raw materials to build out infrastructure and other development projects in a world that's resource limited, there's going to be an increasing demand for recyclables in the longer term, especially in light of the fact that we need to focus on sustainable development, which I think is becoming increasingly clear. So even with all the challenges that we face, I think it continues to present opportunities for ISRI and for our partners like the NRC and the Pennsylvania Recycling Market Center to educate policymakers and the public and others about all the great economic and environmental benefits of recycling. And I certainly would reiterate that scrap recyclers are resilient. We've seen these cyclical highs and lows, and the scrap industry is going to continue to provide all those economic and environmental benefits going forward. So that's the end of my fairly lengthy prepared remarks, and I'm happy to take any questions that you might have at this time. Wayne?
Okay, thank you, Joe. That was a very thorough and detailed update on the recycling markets for metals. So we're now going to field some questions for Joe. Again, if you have a question, please
Great.
enter them on the GoToWebinar dialog box. And so we have a couple here already. This question I think is more for a broker versus an economist, but this attendee is having a hard time finding a market for ferrous dust from their shot blast process. I don't know if you can provide any leads, or maybe your organization can help out.
Yeah, I can't recommend any individual companies, but what I can say is that we do have a number of resources at ISRI that can certainly help. Not only our ISRI directory, but I think there's a searchable directory on the ISRI website by commodity and by geographic area, so you can look at some of the companies in your region through the website, and I'm happy to provide that link. I don't have it off the top of my head for you guys. But then I would also, just recommend some of the ISRI meetings as well, which are great opportunities to meet people, not just ISRI National, but at the ISRI chapter meetings in your local area. ISRI has 21 chapters around the country, and those are great places to meet local buyers and sellers within your area.
Good. This question is about your organization, Joe. Does ISRI collaborate or partner with other recycling institutes around the world, or this says BIR, I'm not sure what that means, to share and learn
Yep.
practices?
Yeah, absolutely. We certainly work very closely with the BIR, the Bureau of International Recycling, but with other industry associations around the world. And there are a couple in China. There's the Metal Recycling Association in India. There's the Bureau of Middle East Recycling. And then there's INRI down in Mexico. There are any number of national and regional recycling associations that we partner with around the world. I would say that in terms of organizational size and reach that ISRI provides, I think, well, we've got the capacity at any rate to provide a lot more on the training and education front just by the sheer size of our organization. And not just the number of members, but we've got over 40 people here on staff at ISRI with a number of experts in each area that are really great resources for our members. But we certainly do coordinate with other recycling associations around the world as well.
Okay. Any more questions? That's all we have right now. Oh, here comes one.
Oh, that's easy.
Oh, here's one. This is pretty long. Iron and steel scrap slumping export demand. Your graph showed a strong decline in demand from Korea and Taiwan, while India and Mexico increased their demand. What was the reason for the declining demand from Korea and Taiwan?
I'm sorry, was that on the ferrous or what was?
Yeah, on the iron and steel graph.
Yep, iron and steel. Yep. So certainly we've seen a lot of demand from India as their steel sector ramps up. But as I also indicated in the presentation, South Asia in general has really been a source of growth for ferrous scrap demand, not just India, but also Pakistan and Bangladesh as well, which to me was kind of surprising. I think shipments to ferrous scrap to Bangladesh last year were in excess of 100,000 metric tons. That was up from like 10,000 tons the year before, and basically nothing a couple of years back. So I think as individual areas are growing faster, and India is certainly one of the fastest growing countries in the world, and as manufacturing ramps up in different areas, including Mexico and some of these other up and coming markets for us, we're going to see the scrap demand pick up, not necessarily enough to offset some of the weakness in China, but we'll take what market gains that we can.
Okay, are there any specific focus areas in technology investment you see in the industry?
Yeah, like I say, I think especially on the sortation and separation, I think those continue to be areas where recyclers continue to look. again, we've got a lot of excess capacity in terms of some of the large shredders and other large capital equipment that we have. So I think there's probably more interest in, mobile shredders and other smaller equipment and the separation and sortation equipment, both for the metals but also for non-metallics as well. I think when you're looking at plastics in particular, that separation technology really is just starting to take off. And I think that's going to be an area of growth going forward.
Okay. All right, I think that's it, and we're actually just about out of time. So again, this webinar, like all the webinars in this series, has been recorded and will be made available via YouTube links on both the National Recycling Coalition and Recycling Market Center websites. Thanks again for joining us, and thanks again, Joe, for taking the time out to provide this update. We'll hope you'll join us for next month's webinar, and please visit our websites at the NRC and the RMC for schedule updates. So thank you again, and have a great day.